Hey, and thanks for watching. Today I'll be building a tenant rollover analysis model. Now you may recall a few months back I built a I recorded a watch me build a multifamily model, and this video will be very similar. The concept being uh, I do my best to talk through how I'm building the model, the keystrokes I'm using, the methodologies I'm following, so that you can learn at least how I model. I found it's been a very useful method in my life to learn how to model. Just sitting behind someone, watching how they do it, you learn a lot of tricks that perhaps you didn't know, or maybe you learn a better way or just a different way to model something out. Now, the difference from in this video compared to the multifamily model, look, a multifamily model is a very common model. This is a rollover analysis model. This is unique. You're not going to see a lot of these models out there. This is how I do it. Certainly, there's a lot of other ways to do this, and I'd love to hear your method for modeling rollover. But essentially, the concept is this: real estate is a function of future cash flows. The more uncertain you are about those cash flows, the less the property is worth today, and so we need to understand the certainty of cash flows going out in the future. One area of uncertainty, right, is periods of roll. So you have a rent roll. In my case here, it's going to be a 5-tenant retail rent roll, and I want to understand where do I have expiration in my leases. Not just the first generation lease, but second and third generation lease based on some leasing assumptions that I'll be making. Now, before I get started, I have saved 2 files, a blank file that just has the formatting, and you can download that file if you'd like to follow along, you can, or in your own time you can try to rebuild the model. I've also included in a zip file, and you can download it on our blog. I'll include a link below, the completed model, so you can see the formulas I used. Hey, if you notice an error, I just built this real quick. There may very well be an error or two in here. Let me know, and I can update the files. That way we have something correct for people to download. So with that said, let's go ahead and get started. I'm going to fill in the headings. I'm going to actually pause the video and just fill these in quickly. I don't think you want to watch me fill in headings, so let's do that. And so I have my headings up. I have a title. You'll notice that I use different coloring to identify the different sections. I have first generation lease here, and that's what is in this section, actually this first section right here. I have 5 tenants in this little retail center, including a grocer, my Beats Market. And then I have lease start, term in terms of months, the lease end, and the total square footage. Now your rent roll will be expanded, right? I'm just sticking to the information that we need to complete this task, but more than likely your rent roll will include other things such as rent bumps, reimbursement methods, etc. I have an analysis start date, and that's important for building out our periods here, and the methods we'll be using to determine when leases roll that method is based on these periods, and so it's very important that we have that correctly. So I'm just going to go ahead, start analysis start. Let's do January 1st, 2017. Then we're going to have lease starts for each one of these tenants. These are inputs, and so these cells I've set as blue. So I'm going to say May 1st, 2012, July 2016. Haircuts and stuff, that's December 1st, 2013. My Beats Market, that's April 1st, 2005. And then finally, Community Bank. This is an out parcel, likely on a ground lease. That's not really relevant here, but there will be some roll when that lease is up. I'm going to put this as January 1st, 1990, which you'll see a lot, right? They're on a 30-year term. So then in the months. Now what I've done for each one of these, right, I've set some number formatting. So these are set as dates. This is also set as dates. The keystroke I use just to quickly change this date is I go here and then I hit Control-Shift-3. So just let me show you that. Let's come. How about right here? And then you just hit. Actually, that's Control-Shift-3. That sets your date, right? So then we can go 4/1/2018, etc. Okay. So but again, the formatting I had already included. So my lease end is going to be a formula based on how long my term is. Now you can do it the other way if you'd like. I am going to be tracking months in terms of numbers, so I have dates in so that we can visualize it, but ultimately the formulas will be based on months, month 1, 2, 3, and so forth. So I'm just going to go ahead and drop in my lease terms, 5-year, 6-year, 5-year. Let's do a 15-year on the grocer, and then a 30-year on the out parcel. So then here's our first formula. So I'm going to be using an EO month function, which looks like this, EO month. And it asked me first the start date, which obviously is a lease start. And then when does this lease end? Well, it ends 60 months out, okay? However, if you think about it, it's ending the last day of the previous month from the month when it started. So if this started, in this case, May 1st, it will be ending April 30th. So I'm going to be using this number of months minus 1, but because it's an EO month function, EO month takes the month and then it grabbed the very last day of that month. And so I'm going out 59 months, but I'm going to the last day of that month. And that's our date. And then I'm just going to copy that down with a Control-C, mouse down with the down arrow, hold the shift down arrow 1, 2, 3 times. I'm selecting that. Now, I don't want to copy just with a Control-V because I'll lose my formatting, right? We have this horizontal line, and if I were just to copy down, it would delete that horizontal line. And then I have to go and I have to correct my formatting. Now, there's 2 ways to deal with this. The first is don't do your formatting until the end, but in a lot of cases, you're changing formatting. So what I use is a paste as formulas. Now, you can use your mouse. I don't use my mouse, so I just hit an Alt-H, which opens up my Home tab. I hit V, and then I hit F. All right, but you'll get fast at it where you'll just copy this, you'll come on down, you'll paste, and you'll continue on, right? So then we have our square footage. These are inputs, blue cells. I have already set my cell formatting to look like this. Now to do that, what I'm doing is I'm hitting a Control-1, that opens the Format Cells bar. I hit Tab, that enters into the category, and then I can move up through the category, and I'm going to choose a custom. So I hit Custom, I hit Tab again, that opens up this section. And now this is what I want this formatting to look like. Is I want it to be a number, but I want to tap or place a SF, square footage, at the end of that, so that I can just visualize that, hey, this is square feet, but I want it to be a value and a number so that other formulas can identify that cell as a number. So I'm going to use a number sign, comma, number sign 0, okay, and that sets that so that there's a comma, and then I'm going to space, quotation mark, capital SF, quotation mark, and then I hit enter, okay? So I have that now. Again, the formatting here has already been done. I had done that previously. So let me set the size of each one of these, and I have my square footage. Finally, I just want to sum up the entire rent roll. Okay, and the shortcut to do that is Alt equal sign, and that just sums everything vertical, any number vertical up until it hits what a cell that does not have a number in it. Hit enter. So our rent roll, 56,300 square feet. The next thing I want to include are what in Argus is known as market leasing assumptions. I'm calling here future lease assumptions, which I think makes more sense, right? What we want to think about is, in the future, what assumptions are going to be applied to each one of these individual tenant spaces. Not the tenant itself, but the space itself. So if we think of an inline restaurant, a little small restaurant like this, little chili place, likely how long does it take to lease up space like that in our market, right? So in this specific case, I'm going to call that 6 months. So if Chow Chili were to vacate, I would guess, based on my knowledge of the market, it's going to take about 6 months to lease up that space. JJ's Pizza, same. Haircuts and stuff, same. Now the Beats market, this is a grocer. The grocer bales, it's going to take a while. So I'm going to guess it's going to be a year and a half. In all likelihood, it could even take longer than that. I'm going to say there's a year and a half of downtime. Now, keep in mind, a lot of these leases, these longer-term leases, they have some notification clause built into the lease where that tenant has to give you, say, a year notice before vacating. And so in this case, really you have about 30 months, right? The 12 months of notification plus 18 months of downtime meaning it's vacant, no income's coming in, etc. So you have about 30 months to lease this space up. And finally, community bank, I'm going to say about 12 months. Likely we would be redeveloping the pad into something different. And so there's that. Finally, the lease term. Again, so we have the lease term, the contractual lease term for each one of these 5 tenants. But in the market, this type of space, what is your typical lease term? I'm going to say 5 years for these inline spaces, and then I'm going to say 10 years on my grocer and my out parcel. It's a conservative number. Every market's different. Likely would be longer, but let's just use that for simplicity's sake. Now we get to the fun stuff. So we've modeled our existing contractual rent roll. We've modeled what we think would happen in the future when these tenants roll or when their lease expires and they vacate. So what we want to do now is we're going to place here the dates at which these events occur. So I have the first lease start and the first lease end. Then when does the second lease start? So when Chow vacates, or even, yeah, when Chow vacates, when does the next tenant to fill this space, when do they take occupancy, and then when do they vacate, or when does their lease expire? And then the third tenant, right? And so if you were building something more robust, you might go out to 5th, 6th, 7th generation leases, just depending on the type of property you have and the length of your hold period. So the first start is simple. We already have it here. So we're just going to hit equals. We're going to mouse over to lease start, hit enter, and then again, Control C, Shift, down arrow a few times, Control H, VF, and we move over to the first end. So, and likewise, the first end here is simple. It's just an equals, mouse to the lease end, enter, copy, down, Control H, VF, and we have the first start and the first end. Now, here's where it gets a little bit more difficult. We need to determine when is the second lease going to start. Well, what do we know? We know that the first lease ends April 30th, and then there are 6 months where this space is vacant. So ends April, that means we have May, June, July, August, September, and October where it's vacant, and so this tenant will begin its lease November 1st. Now in this case, I'll be using an EO month formula again. Now if you recall, EO month means it's going to output the last day of the month, a certain number of months into the future. And I'm using an EO month because with an EO month, I know precisely what day of the month that formula is going to output, and then I can increase or decrease that day manually. So for instance, let me show you how this would look. So we're going to use an EO month. I'm going to mouse over to lease end, right? And I'm just going to leave this, oops, I'm sorry, need to type in EO month. Okay. My start date is the end of the previous lease. And then I'm going to comma. And how many months out are we going? Well, we're going our downtime months out. And now I'm going to lock in with F4, 1, 2, 3 times. I'm going to lock in the column so that I can copy this over to my next generation lease start, and I won't have to rewrite this formula. And so I've now identified 6 months out. Now here's the issue. It's going 6 months out, but it's picking the last day of that month. I want to do a +1, and that's just going to go 1 additional day, and the result is November 1st. Now if I didn't do the +1, it's going to go 6 months out. Expand that. But the last day of the month. And the lease isn't going to start then, well, in reality, who knows when it will start, but in our model, we want to keep this simple. We want to have leases start on the first day, and we want leases to end on the last day of the month. So we just hit the +1. And then again, we're just going to copy this down. Now here's the beauty of what we have. This now, because we locked in our downtime, the column, we can just copy, Alt-H, VF. And we now have this formula. Now you'll notice it's not working correctly because we don't have an end, so let's do that. Now this formula is very similar to how we built the lease end formula for the contractual lease. Again, an EO month. And it's the start date is the start of the lease. The end date, though, is the future lease assumption months, locking in the column again. And then again, it's 1 minus 1 month because we're going to the end of that, and that gives us October. And so that makes sense, right? We're going out 5 years. 5 years from November 1st, 2020 would be November 1st, 2025. But since we're finishing on the last day of the month, that would be October 31st. Copy this down, all dates VF. And then this all ready for us, copy. And we have our lease generation schedule completed. So we now know when each one of these tenants' spaces are rolling. Now the easy part, well, the somewhat easy part happened, which is we just want to build out a table where we're going to be looking at each month and say, is any square footage rolling in that month? What we're really saying when we say rolling, are any leases ending in that month? And so we're first going to just simply list out the months. We're going to go out 120 months. I already added formatting here. You can see that this is a value, but then I tack on in the front the month so that I know that we're dealing with months. So I just drop in a 1 in cell Q6. R6 is a Q6 plus 1, and then I'm just going to copy this to the right. Now what I did here is I copied with a Control C, I mouse over 1, I hit Control Shift, right arrow, all the way to the end. Now you'll notice out here what I've done is I hid all of these rows. Oh, I'm sorry, columns. I hid the columns so that I can do this. I can select all the way to the right and it doesn't go too far. And then I'm just going to, again, with Control Shift held down, I moused, no, I'm sorry, I didn't mouse. I right arrowed all the way to the end, and then I hit left arrow. Nope, I don't want to do that. I undo the control, just holding down Shift and left arrow, and then I'm just going to paste. So you can see how that went. Okay. Now, if I hold down Control and right arrow, that goes to the very end, right? So that's why I did the Control Shift. Then we have month end. So month 1, what date does month 1 end? Well, it ends EO month from the analysis start. Hit F4 to lock that in. And then how many months out does that go? Well, it goes 1 month out minus 1 because the first is the same month. And that makes sense, right? So month 1, the end date, if analysis started January 1st, the end date would be January 31st. And then we can just copy this over. Control Alt VF. And that looks right. Month 2 ending February, March, April, and so forth. Finally, the year. Now I have a video up where I show how to do this, but what we want to ask is what year is this month in? And there's a really easy way to do that. We use a round up. So we round up the month divided by 12 to 0 digits. And that tells us it's year 1. Again, I'm using cell formatting that puts the text year in front of the value, but this is actually a value. So if I were to hit equals here, oops, let me just find the cell that there's no formatting in. You can see it's going to output a 1, right? So that's a 1. And then we're just going to copy this over. Now you'll see when we hit month 13, it goes to year 2. Why? Because 13 divided by 12 is a little bit more than 1, but since we're rounding up, it's going to round up to the next whole number, which happens to be 2. So just a fun little trick. So we're going out 10 years in this analysis. Finally, what we're going to ask, and this is the fun formula, what we're going to ask is, does this date, this month end date, equal either the end date of the first lease, the end date of the second lease, or the end date of the third lease? And we're going to use an OR function to do that. So we equal or Q5. We're going to make the row absolute by hitting F4 twice. So Q5, does Q5 equal J7? Locking in the column, making the column absolute, 3 F4s, a $sign right in front of the J. And so what we're asking is, does this month's date equal this date here? Or does this month's date, again locking in the row, equal this date? Locking in, oops, locking in the row, forgot to hit the equal sign, equal this, locking in the column. Or finally, does this date, row, equal this date? So that function now will output either a true or a false. Now, there's a cool little trick in Excel where when Excel outputs true, there's a value assigned to that true. It's a value, it's a 1. If Excel outputs a false, that value is 0. So what that means is we can then take this true or false output and we can multiply it by any value, and the result will be, if it's true, that value, and if the result is false, 0. And what value would we want to output? Well, we'd want to output the amount of square footage for that space. Again, making the column absolute by hitting F4 3 times. We hit enter. So the result now, because we've multiplied that true or false statement by a value, is either going to be 0 or it's going to be the value. And you'll see it. We're expecting to see April 30th, 2020, 1,600 square feet, and then October 31st, 2025, 1,600 square feet, and so forth. So I'm just going to go ahead and copy this over, and then let's double check. Let's come out to April 30th, 2020. There we have it, right? We continue out to 2025, I believe our period, yep, there it is, October 31st, 2025. And then because we made our cells appropriately absolute or relative with that F4, we can just copy this formula down, again using Alt-H-VF, and we now have the rollover for each one of these tenants. Pretty cool. Finally, for our analysis, what we want to do is we want to sum up those rows, copy this over, and now we have the sum in each month of the amount of roll. Now, no two tenants roll in the same month, but if you have, more than likely with large rent rolls, especially when you consider that a lot of tenants starting out early on will be signing in similar or same months and might have same terms, you're going to have multiple tenants rolling in the same month, and so we need to sum that up. So we finished the bulk of this. We've modeled out when our tenants are rolling, and now it's just a matter of doing the analysis. And so we come down here to our rollover analysis. The first thing I'm going to do is I'm going to link this up with our tenants. That way we could come up here and change the name of our tenants. Bob's Crab Shack, and changes it down here. Then we want to ask, and this is an important piece of your analysis, we want to understand how much term is remaining in each one of these tenants. Because again, recall, we want to understand the volatility of our cash flows. And one piece is, so we got this rent roll, how much term, how much contractual income can we count on in this rent roll? And that's where this remaining term comes in. So for the remaining term, we're going to use a date diff function. Now my co-blogger Mike, he wrote a post on this lesser known function in Excel. And it doesn't have Excel support, meaning it doesn't provide you the typical instructions that most functions in Excel do, so I'll have to walk you through that. So the date diff will tell you the number of periods that exist between two dates. So you type out date diff, open parentheses, pick your first date, that's the earlier of your two dates that you're going to be comparing. In this case, it's our analysis start, and then I'm going to lock that in with an F4. And then our end date, right, is the end date of the lease that we're considering. All right, and we're not going to lock that in because we're going to be copying this formula down. And then finally, DateDiff asks, what type of period do you want to output? In my case, it's months, so you'll do quotation marks, M, close quotation mark. You can also use D for day or Y for years. Close this. And so there are 39 months between the analysis start and the lease end of the Bob's Crab Shack. We're going to copy that down again with an Alt-HVF. And then we're going to do a weighted average remaining lease term. Now I'm not going to drop that in quite yet because I'm going to need the square footage because our weight will be based on square footage. Now you might do a weighted remaining term based on income, gross income from that tenant. You can also, by the way, do a rollover based on gross income, which is probably a better metric to use, but it's more complex, right? Because you have to then calculate in contractual rent bumps and then market leasing market rent and increase in market rent and then rent bumps in your future lease tenants, etc. Right? So in this case, I'm making it simplistic by using square footage, but a more complete model would look at this on an economic basis. So I dropped in there the square footage, sum those up, and then I'm going to use a sum product to calculate the weighted average remaining lease term. So the sum product here is going to be our term. I'm going to leave that a relative, but I am going to lock in the square footage so I can use this formula again. I may or may not use it, but I typically always do that. So I hit F4 for those. And then I'm going to divide that by the sum of our square footage, which is this value, F4, to lock that in, enter. So our weighted average remaining lease term is 39 months. Not very good, by the way, and that's mainly because our Beats Market and our Community Bank are rolling here in the next couple years. Finally, we want to use a SUMIF to ask how many square feet are rolling in each year. So we have the square footage by month, but most of your analysis is going to be done on a yearly basis. So I use a SUMIF. The range is these years. That's why we added the years row. Hit F4. Our criteria in this case is the year. Now I'm going to lock in with F41 2 times the row, and that way we can copy down and keep the row constant, but leave the column relative so we can copy to the right. And then finally, our sum range is this, right? Bob's Crab Shack. Now we want to lock in the column so that as we copy to the right, the sum range doesn't move to the right, but we don't want to lock in the row so that as we copy down, it'll move down with the tenant. So we finish that. We copy over here to the right, copy down, and then just a sum up, and then I'm just going to copy over here. All right. So now I have by year when these rolls are happening. Now you'll notice there are, in year 4, 2 tenants that are rolling that year, and so we have a higher roll. So then we know how much square footage is rolling in each year. Let's just do some quick analysis to determine what percentage of our total square footage is that. So we just do an equal the amount of square footage in that given period divided by the total square footage. Hit F4, enter. Copy this over to the right. And so we can now see year 4 is there's a lot of roll happening. Now that makes sense, right? Our grocers leaving in year 4, and so or at least expiring in year 4, and so we have some significant risk here. And so we want to know, as we're underwriting this going in, what's the likelihood that this Beats Market actually does vacate in year 4? And that's a different video, but we would look at their sales per square foot. We want to make sure that those are strong. We want to look at the competition. Are there other grocers that are coming to market that could hurt Beats Market? What's the size of this store for Beats Market, and what's the format that Beats Market is using now? And so let's say that, okay, this store is a 45,000 square foot store, but Beats Market prefers a 90,000 square foot store. They may consider closing this and opening one across the street, right? So there's a lot that goes into determining the likelihood of them leaving. But because we know that there's this risk here in year 4, we want to do some additional research. So finally, we want to understand the cumulative square footage that is rolling, has rolled through to that year. And we just do a sum of year 1 through year 1. Now what I do is I close parentheses, and then I mouse, oops, F2, mouse back in, and I'm going to lock in the first cell, leaving the second cell relative. And the reason I do that is, as I then copy to the right, I'm summing progressively more and more cells. So that first cell, again, locked in. These cells right here are, this cell is relative. And the result is we can see how long into the hold period until all of our tenants, 100% of our square footage, has expired. And you'll see properties where you'll have a 10-year hold period and only 50% will have expired. You'll have others, like this one, where by year 4, we're almost at 100% again because of peak market. But by year 6, all of our tenants have rolled. And so we know there's substantial risk here. And so the discount rate that we use in valuing this property is going to be higher than if there wasn't this rollover risk that we have. Finally, let's, just for fun, visualize our rollover risk. I'm going to do that by just dropping in a quick column chart. So what I'll do is I'll select my years. Those will be my labels at the bottom, right? And then what percentage in each year is rolling. Then I'll come up here to insert, and the recommended chart is going to give me a column chart. Hit OK, I like this one. And let's just put it right here. And I'm going to label this, let's see, rollover as percent of NRA, net rentable area. I'm going to change, let's see, let's use for design, let's do this one. And right click, I'm going to format my chart area. Click here. I actually know what I want to do is I want to select my bars, there we go. And I want to lessen the gap between these. Let's do it, go to 20%, make those like thicker. And then, yeah, I think that looks nice. So now we've visualized our risk and we know where we have problems, and so we could already see that here. But as you get larger rent rolls, or if you want to present this to someone, you know, that's it. It's just a nice little addition. So with that, that's the rollover analysis model. Reach out if you have any questions. Try it for yourself. If you have any improvements, let me know. And happy modeling.